Number 1. Real estate. Real estate has been one of the proven asset raising techniques. Many multimillionaires build their assets and get rich by investing in real estate. It may not make you wealthy overnight, but it can add zeros to your net worth faster than many other traditional assets. For example, buying a fixer-upper house, repairing it, and then selling it for a profit might result in a high return on investment. Just remember to buy low, renovate smart, and sell quickly. House flipping, as the procedure is known, is primarily a math game with big rewards available to anyone prepared to take on the task. Buying multifamily properties with considerable monthly cash flow is another technique that might help you generate wealth fast through real estate. This cash flow can be saved and used to buy more properties, creating a domino effect, allowing you to grow your real estate portfolio quickly. Number 2. Owning your business. Don't be surprised if I tell you that if you run your own business well, you can make money even while you rest. Even if you don't work, yeah, that's true. Your team, factory, products, and marketing will make money for you. Jeff Bezos, Elon Musk, and Mark Zuckerberg are the ones who certainly inspire us when it comes to business. But it must come with a disclaimer. Starting and growing a business isn't an easy way for most people to make money. Building and growing a business takes a lot of work, but if we do it right, we can automate business, turning it into a passive income asset. So it is a valuable asset, but it is your responsibility to make it work. I hope you're following me. Number 3. Stocks. Stocks are not as complicated as they appear, but they are a simple way to own a portion of a publicly traded company. Assume a company issues 10 million shares, and you hold 1 million of them. This makes you a 10% owner of the company. This remarkable breakthrough in financial instruments has made it easy for the average person to own a piece of some of the most profitable companies in the world today. Dividends are another way for people to make money using stocks. Many companies give a portion of their profits to shareholders every quarter. Investors who get dividends receive a quarterly check on top of their investment gains. Investors can either utilize their dividend income to spend as they wish or reinvest it into the stock market, compounding their higher returns. Number 4. Bonds. Bonds are generally safer investments than stocks since they are loans to be paid rather than stock ownership. So if a company's market value goes down, the stockholders also lose value. On the other hand, bondholders don't lose value. In some cases, they gain value because the company still has to pay its debts, whether its market value goes up or down. Unless the corporation declares bankruptcy, it must pay its bond issuers. Bonds are often safer investments but provide a smaller return on investment, with an average return of 3% each year. Investors use bonds to diversify their investment portfolios and reduce overall risk. Number 5. Index fund. This one's interesting. An index fund is a mutual fund whose holdings match or follow a specific market index. You may use it to develop a balanced portfolio with decent returns. Index funds don't try to beat or earn higher returns than the market averages. Instead, these funds try to act like the market by buying the stocks of every company on an index to match the performance of the index as a whole. Index funds can help investors balance risk in their portfolios because market fluctuations are less volatile across an index than individual stocks. Number 6. Earn royalties through inventions. Inventors do not exist only in the past. Your unique inventions can generate passive money for you. Getting started is likely to be one of the most challenging aspects of the inventor's journey. First, you want to ensure that your invention is valuable and answers a problem. You can earn a portion or dividends from the income earned by your concept once it's on the market, depending on the agreement you make. Number 7. Gold, silver, and platinum. Precious metals have a place in the portfolio of any sensible investor today, but which precious metal is the best for investment? We'll begin with the grandfather of them all. Gold is defined by its tensile strength. It has specific industrial applications in dentistry and electronics, but is best known for jewelry. Unlike gold, the price of silver fluctuates between how it is seen as a store of value and how it is used in industry. Platinum, like gold and silver, is traded on global commodities, markets around the clock. They diversify portfolios and serve as a store of wealth, especially as a hedge against inflation during periods of financial instability. Number 8. Land. You may be wondering if purchasing land is a worthwhile investment. The answer is yes. Of course, it's not for everyone, but investors who want to diversify their portfolio and generate high profits might consider purchasing land. Land as an investment can be advantageous since it gives investors higher returns at lower risk and allows them to diversify their portfolios. Though land is a golden child of investing, owning land provides you with financial security as well as peace of mind, so go ahead and make a deal. Number 9. High-yielding savings accounts. Do you want to know if a high-yield savings account is good for you? Knowing how high-yield savings account works, you can decide if you will open one. A high-yield savings account is a deposit account with a much higher interest rate than traditional savings accounts found at brick-and-mortar banks. Online banks and credit unions usually offer these accounts. Aside from the increased interest rate, high-yield savings accounts function similarly to other savings accounts. You put money into the account and the bank gives you interest in exchange. Withdrawals can be made as needed, although your bank may charge a fee if you exceed a set number of monthly withdrawals. Number 10. NFTs. NFT is an abbreviation for non-fungible tokens. It's constructed using the same code as cryptocurrencies, such as Bitcoin or Ethereum. But that's where the similarities end. Each NFT has a digital signature that makes it impossible for them to be traded for or equal to each other. They are non-fungible. An NFT is a digital asset representing real-world artifacts such as art, music, in-game items, and videos. They are bought and traded online, frequently using cryptocurrency. Even though they have been around since 2014, NFTs are now becoming an increasingly popular means to buy and sell digital artwork. Can you believe that since November 2017, a whopping $174 million has been spent on NFTs? An NFT gives the buyer ownership of the original object. Furthermore, it includes built-in authentication, which acts as proof of ownership. We've talked about some of the top income-generating assets, but they will only take you very far if you have a long-term personal financial strategy and some learning. Remember to do your research before you start investing. Guys, this was all from us. Thank you for watching Growth Mindset. Hit the like button and be sure to subscribe because more valuable content is on the way. Let us know what you think in the comments section below. See you in the next one.